tired of having hundreds of tabs open and still none of your questions about home loans are being answered? We've made it simple for you. In our recent webinar, we have covered all the questions about home loans. From your eligibility to documentation to hidden charges, everything you should know about, and here are the highlights from it.
How do we go about home loans? What is the process from applying for the home loan to the disbursement?
You always need to choose a right lender. So there are more than 120 lenders in the market, like banks, NBFC, and housing finance companies. So everybody has their own risk appetite and the kind of profiles they lend to. Normally, you are working and you don't know which is the right bank for me. Might be your salary account is an Axis Bank, but Axis Bank would not fund that property you are willing to buy. So it's very important to understand who is the right partner. Then coming to the home loan application. So the process starts with the application submission. Normally, we submit a duly filled form with KYC documents, income proofs like salary slips, bank statements, ITR. In case of self-employed customers, then the detailed financials and the GST returns will also be submitted along with the application, and property-related papers. Then it comes to a loan sanction. When the file is submitted to the bank, the lender evaluates the applicant's creditworthiness based on the income, credit score, employment history, repayment capacity. If all checks out, a sanction letter is issued with the key loan terms, where bank says we are okay to lend you this amount of money and on the basis of your income and your credit profile. It goes for a property verification. In property verification, there are two legs to it. First is legal check, second is technical check. Legal check verifies ownership and title clearance, and the technical process evaluates your construction quality. What is the construction stage of the project? If you're buying a property in a under construction property, or it's a ready to move in house, they will check the quality of the construction, the residual age of the property. Residual age stands for, let's say, if you have you're buying a property which is already 20 years old. So what is the residual age of the property? For how long the property will sustain? So all checks are done, and after that, the valuation is given for that particular property. So let's say you are buying a property at a 1 crore price in the market, and bank will tell you the right valuation of that property. So that's the benefit of having a home loan. I'm sitting in Delhi and want to invest in Bangalore. Might be I'm not aware of the right valuation of the property. So when we apply for a loan, there can be a gap of 5 to 7% valuer to valuer. Once the property verification is done and you have got the in principle sanction, then the signing of the agreement is done. Once all checks are cleared, the loan agreement is signed, and other formalities like ECS mandates or post-dated checks are completed. So once you got your in principle sanction letter, your property verification is done, and your loan agreement is signed, then comes to a loan disbursal, where bank disburse the loan either in full for ready to move in properties or in tranches for under construction properties which are linked to construction stages. So this is all about the home loan application in a nutshell.
I have a follow-up question. You mentioned that the bank actually does the technical and the legal due diligence. So
Yeah.
is it safe to say that while you're taking a home loan, the home loan due diligence is as equal as doing a legal due diligence from a lawyer?
Absolutely. So once you apply for a loan with a bank and bank is lending you against that collateral, so they will ensure that that property has a legal clearance, the title is clear of that property, the technical parts are clear, the map, the sanction plans are in place, the property is built as per the sanction plan. So it's right to say that once you are applying a loan, and if bank is lending you against that collateral, it's safe to buy that property.
When we should approach for the home loans, after deciding the property or while you're in the process, or what is the right time to approach it?
There are two ways to it. So one is if you are going for a self financing, you have funds in your hand, then you can definitely first search property and buy the property after you finalize the property. But if you are going for a home loan, so it's always better to take a in principle sanction first, because see, with in principle sanction, you will know that how much maximum loan amount you will get. On the basis of that, you can decide your budget and you can select the property you want to buy. Might be you want to buy a property of, let's say, 3 CR, but on the basis of your eligibility, your income, and your current obligations, bank will say we will be able to fund you maximum of, let's say, 2.5 CR if you are able to manage extra 50 lakhs or not. So it's always better to get an in-principle sanction from the bank. Meanwhile, you can identify 2-3 properties within your budget. Say your budget is 3 CR, you can look out for 3-4 properties from starting from 2.5 CR to 3.5 CR. So when you get the financial sanction, you can go ahead selecting the right property as per your budget.
You mentioned about self-financing. Now there's another debate or discussion which actually goes on. What is better? You financing, let's say, 60% of the investment from your own pocket, or leveraging home loans for the investment?
So see, both options have their own merit. If you're going for a self-financing, there will be no EMI burden, no interest payments, full ownership from day one. But the cons of this self-financing is that large one-time capital outflow, reduced liquidity, and missed opportunities to invest elsewhere. Right now, there are very good investment options. If you are investing your lifetime savings in a one go in a property, you might be missing out with the opportunities to invest elsewhere where you can get a good return out of it. If you're going with a home loan, there are multiple benefits of that. First is tax benefit. Under section 80C and 24B, you can claim the tax. Under 80C, you can claim 1.5 lakhs. And under 24B, you can claim 2 lakhs of interest amount. Then taking a home loan preserves your liquidity, help you stay invested in other goals. If you are doing self-financing, might be you have to wait for 2 more years to save that particular amount. By that time, the property price will rise. So it enables early home purchase without waiting years to save. The con of having a home loan would be long-term interest payments and regular EMI commitments. But the bottom line is, if you are financially stable and confident in managing EMIs, a home loan can offer flexibility, leverage, and tax savings. It's always better to have a home loan. And the another benefit is bank is lending you on that property. That means the bank has verified the property is out of the legal challenges and the technical challenges.
What is a pre-EMI and what is an EMI?
Pre-EMI, you pay only the interest on the loan amount, disburse until the property is ready. Principal payment starts after possession. So pre-EMI comes into a picture where you're buying a property which is under construction. You will only get pre-EMI only where the property is under construction. The project is not ready. It's not ready to move in. So it's getting constructed. So there is a CLP plan, which is known as construction link plan. Though you have availed a loan of 1 CR, but you will pay only on the amount which has been disbursed to a builder as per the CLP plan. Till the time your total loan amount is not disbursed, you will keep paying interest only on the amount which is disbursed to the builder. This is known as pre-EMI. Now coming to the full EMI, you both pay interest and principal from the beginning. There are points I would like to highlight which you should watch out when you go for a pre-EMI. Sometimes what happens is builder says you just avail a loan, we will pay the pre-EMI on your behalf. In such cases, you should make sure there is a legal agreement ensuring a developer pays till a defined date. What happens if construction is delayed? So let's say if construction is delayed, who will bear the interest cost? That has to be clear in the agreement. Pre-EMIs are still your liability. See, understand, even the builder is paying your interest cost till the time he is not giving you the possession. But still, the pre-EMIs are your liability. They will reflect in your credit report, even if the builder pays. So always check if the pre-EMI scheme inflates the base property price. Always check on these points whenever you are going with a pre-EMI or under construction property.
What are the hidden charges that typically banks don't tell you about that we should look while applying?
So see, when you apply for a loan, you only pay the login fees, and you think this is the only fees you have to pay, which is normally 5,000 plus GST, 5,900. In some banks, it's 1,000. It varies from 1,000 to 5,000 rupees. And people think this is the only fees I have to pay. And once your loan is sanctioned and you are at a stage where your loan needs to get disbursed, banker will tell you a lot of charges. First is processing fees. It varies from 0.25% to 1% of the loan amount. Like I said, you are buying a property in an under construction project, which is already approved by some banker. They offer some discount on that, but you have to pay the processing fees, which varies from 0.25% to 1%, and sometimes it goes to 1.5% also. Then the other charge is MODT charge, which is known as Memorandum of Deposit of Title Deeds. This is being charged during property registration. Then this again varies from state to state, 0.10% to 0.25%. There are switching charges as well when you are converting your loan between fixed and floating rates. So always be aware whenever you are availing a loan, please read your sanction letter thoroughly. Then there are legal and technical charges for external verifications. Now this also depends bank to bank and to NBFC. Some banks charge you separately for the legal and technical. Some bank will not charge you separately for the legal and technical validation done, because this is included in the login fees only, which you pay at the time of login. Last but not the least is insurance. Lender often bundles a home loan and a credit life insurance. Ask if it's optional. So you are opting for a loan amount of 20 years tenure, but you can get insurance for 5 years also and 10 years also. It's not mandatory to get it insured for 20 years.
We were discussing about the fixed rate and floating rates, right? So if you can highlight that, and is it really mandatory or is it advisable to actually get an insurance for your home loan?
See, fixed rate is where bank fixes your rate of interest irrespective of changes in that your ROI by RBI, even the RBI changes the basis lending price, your rate will be fixed. So let's say right now the base price is 6.50 as per RBI, and the banker charge the premium on that, and they lend you at 8%. Let's say now next month RBI reduces the base lending price by 25 paisa. Your loan ROI will also reduce by 25 paisa. This is known as floating rate. The fixed rate of interest is where bank says we are giving you a loan at 8%. Even if RBI increases the rate of interest or decreases the rate of interest, your loan amount, your ROI will be 8% for particular tenure. They will never give you a fixed rate for 20 years, but definitely they will fix your rate of interest for 5 years, 3 years, or maximum 5 years. Right now, you can get a home loan at 8%. If you go for a fixed rate, they will charge some premium over that because there is always a probability of getting rate of interest increased in the coming times. If you are availing a fixed rate of interest, you will get a loan at 8.25%. You will always be charged 0.25% extra from the normal rate of interest for that purpose. And then the pros and the cons of fixed rate of interest are, see, if you go for a floating rate of interest, there are no foreclosure charges at all. So let's say you availed a loan for 20 years on a floating rate of interest, and after 2 years you got some funds, you want to close your loan, or you getting a BT done. Right, availed a loan, you got a rate of interest of 8%, but after 2 years you found that you got a loan from HDFC Bank and ICICI Bank is lending you at 7%. You want to get your loan transferred. If your loan is on fixed floating rate of interest, you can close your loan. Bank will charge nothing to extra to you. But if you avail a home loan on fixed rate of interest, you will be charged the foreclosure charges at the time of closure of loan.
Prepayment, I mean, how does that work?
If it's on a fixed rate, then there will be charges. But if it's on a floating rate, there are no charges.
Of course, there are different lenders in the market today, right? I mean, you have NBFCs, you have HFCs, you have private banks. I mean, if you highlight in, let's say, what are the pros and cons for each one of them and who is it for?
Like I said, every bank, NBFCs, and housing have their own segment where they play. Private banks and PSUs are majorly for the people who have their income in reported income in ITR, basically a salary person working in a Cat A or Cat B company. They can apply with PSU banks and private banks. They can get loan sanction easily on the basis of their credit histories. If you're working with a Cat A or Cat B company, private bank and public banks are for you. People are working with proprietorship firms, partnership firms, where you get salary in bank account, but you're working under partnership firm or you're working under proprietorship firm. Now, private banks or PSU banks will not lend to these customers in this segment. NBFCs or housing finance companies will definitely, lend to these customers. There will be some premium charge. Private bank will lend you at 8%. Housing finance company or NBFC will lend you at 9% or 10%, depending on the profile to profile. The difference is PSU and banks offer lower rate of interest, very conservative risk appetite. But if you go to HFCs or NBFCs, they have a deep expertise in housing segment. They are often lenient in documentation part. They will not be very adamant to it, everything. They might take calls on few things.
Personally, I would want to know this, that female borrower, are there any benefits?
Yes, there are several benefits which are offered to encourage women's home ownership in India. So slightly lower rate, 0.05% to 0.10%, not much, but yes, it makes a difference in a longer tenure. Higher eligibility when clubbed with spouse co-applicant's income, your eligibility increases. There are government schemes like female subsidy, if everybody heard about female subsidy. So under the Pradhan Mantri Awas Yojana, having a female co-owner is mandatory for EWS and LIG subsidy eligibility. Then there are stamp duty for women homeowners.
How does co-applicant thing work, and what are the things and advantages of having co-applicant with you?
90% lenders won't lend you without co-borrower on the loan structure. It's a mandate to have a co-borrower on the loan structure. So you never know. Life is very uncertain. If you take a loan, there is an uncertainty about the life. So they always want to have a co-applicant on the loan structure. If you can add your spouse on the loan structure, they get comfort if your spouse is joining on the loan. Let's say if you are looking for a 1 CR loan, but as per the eligibility, it's 95 lakhs. But when they say your wife is joining on your loan structure, they might take some deviation, feeling that wife is also on the loan.
Does it make a difference, like who is first applicant, who is the second applicant?
No, it doesn't make a much of the difference. See, it's just it's 1, 2, 3, 4. That's it. Let's say there are 3 applicants. 2 might be the financial applicants and 1 will be a property owner. Either you have to be a financial co-applicant or you have to be a property owner. That's why you will be on a loan structure. It can't be a case where you are not owning a share in the property and neither your income has been taken.
will there be any charges or penalties for the prepayment of the home loan? Is there any percentage or a number, a ballpark figure that if you're on the fixed rate, what would be the charges?
It varies from lender to lender. Normally, it ranges between 1 to 5%. So by the time the tenure is increasing, they will reduce your penalty charges.
What kind of loan is preferred if I want to buy a plot now and construct home after 5 years? Composite or plot loan and construction loan later?
If you are taking only a plot loan, comes under a commercial loan. Normally, there are policies. There is a gray area. Some bank might give you a plot loan under a home loan, but if you opt only for a home plot loan, it will be considered under a commercial loan by many banks and NBFCs. What you can do is you can avail a plot plus construction loan. Normally, 99% of the bank and NBFC gives you a 3 years of period to commence the construction.
The interest that you're getting from the loan from the bank, is it on your CIBIL and credit score?
A very good question and very important part. Now customers don't know their ROI also depends what slab they will fall in of the ROI. It depends on the credit scores. So banks give you a rebate if your credit scores are good. If you have a 800 plus of CIBIL score, then the probability of getting your loan defaulted in the future is very less. Given that safeguard bank gives you extra discount on the ROIs. Let's say if your bank says if your score is more than 800 plus, we'll give you at 8%. If your score lies between 750 to 800, we'll give you at 8.25%. If your score is below 750, we will lend you at 8.5%.
Understood. There are a lot of questions also around, construction in link plan and the disbursement. I think Propsoch team can also help you. You can always contact the advisors from Propsoch as well for anything related to home buying. We would be happy to help you. We have the community. You can always post your questions on the community, and we would be happy to answer those. Thanks for joining in, and it was great speaking with you today.
Oh, hi. Did you find all the answers to your questions? Let us know in the comments what topics you would like us to cover next. And if you like this video, please like, share and subscribe to our channel.